Before we get to today's picks, I want to clarify something. I have noticed queries about why I've begun discussing stock fundamentals, news, and other non-technical details in these daily videos, despite this channel's focus on quantitative trading. Let me clarify, our algorithm for selecting daily oversold stocks established in 2019 remains unchanged. So why the new layer of commentary? The answer lies in a blend of curiosity and a deeper search for understanding. Over the years, I have always wondered about the stories behind the stocks picked by our algorithm. How do these selections, which we might only hold for 24 hours, fit into the broader market narrative? What can they tell us about market behaviors and trends? I have always seen each of our daily picks as a character. This exploration stems from a desire to delve deeper into the characters behind our daily picks. For years, I have been eager to understand the context around these daily picks, their dynamics at play, and the factors influencing these picks. It's about reverse engineering these picks through a conventional analysis lens. By exploring fundamentals and news, I aim to learn more about my daily picks and, in the process, video journal it. The goal is to satisfy my curiosity, offer a richer view of market dynamics, and who knows, potentially uncover insights and patterns that could inform new strategies when we do a retrospective at some point. And by sharing it with my followers, I aim to foster a community of learning and exploration. I hope this reassures you that our commitment to our quantitative foundation is unwavering. Today's pick, number one, is WDAY. Workday, Inc. provides human capital and financial management software solutions. The recent sentiment around Workday stock being oversold might be influenced by various factors, including its financial performance, market position, and analyst forecasts. Here are some key points to consider based on the recent news and analysis. Financial performance. Workday reported a strong financial performance with significant growth in revenues. For fiscal 2024, the company reported $7.25 billion in revenues, an increase from $6.21 billion in the previous fiscal year, indicating robust growth, market position, and competition. Despite its strong performance, Workday operates in a highly competitive sector with significant volatility. This competitive landscape, combined with the high volatility inherent to the technology sector, might contribute to market sentiments, leading to the stock being considered oversold. Analyst forecasts and ratings. The consensus among Wall Street analysts seems to lean towards a moderate buy for WDAY shares, with a range of price targets, suggesting optimism about the stock's potential upside. However, concerns about limited near-term upside potential and the challenges of operating in a competitive and volatile sector might temper bullish sentiments. Technical indicators. The stock's performance in 2024 has seen a slight decrease, with a drop in its share price from the beginning of the year. This performance, coupled with technical indicators like the RSI, might contribute to perceptions of the stock being oversold. It's important for investors to consider these factors along with broader market trends and individual investment strategies when evaluating Workday's stock. The company's strong revenue growth and strategic positioning in the cloud-based enterprise applications market are positives, but the competitive landscape and market volatility require careful consideration. Today's pick number two is AMLX. Amylyx Pharmaceuticals Inc. is a clinical stage pharmaceutical company. It focuses on developing a novel therapeutic for amyotrophic lateral sclerosis and other neurodegenerative diseases. Amylyx Pharmaceuticals is based in Cambridge, Massachusetts. AMLX operates within the medical drugs industry, a sector ranked 88th out of 252 industries according to Zacks Investment Research. AMLX has been experiencing significant volatility and a sharp decline in price, mainly due to the failure of its late stage ALS trial for the drug Relivrio. This event has caused regarding the future of the drug's market availability, leading the company to pause all promotions of Relivrio. The fallout from this development has had a profound impact on investor sentiment and the stock's valuation, contributing to the perception of it being oversold. Moreover, the stock's dramatic drop can be attributed to broader market reactions to the trial's outcome as investors reassess the company's future revenue potential and growth prospects. Amylyx's decision regarding the continuation or withdrawal of Relivrio from the market will be crucial in determining its financial health and operational focus moving forward. Investors and analysts are closely watching the company's next steps, including its exploration of potential paths forward and its efforts to understand the implications of the Phoenix trial results more deeply. The situation underscores the high risk nature of investing in biopharmaceutical companies, especially those dependent on the success of key drug trials. Today's pick number three is DAVA, also known as Endava PLC. Endava provides a range of information technology services, including software engineering, cloud transformation, test automation, and technology consulting. It caters to sectors like finance, insurance, healthcare, retail, consumer goods, media, technology, and communications. Headquartered in London, United Kingdom, Endava operates within the computers, IT services industry, ranked 74th out of 252 industries by Zacks Investment Research. Despite recent concerns due to a decline in net cash from operating activities, adjusted free cash flow, and changes in client counts and revenue distribution, Endava's strategic acquisitions like Galaxy Group aim to expand its North American healthcare presence, highlighting its growth ambitions. Nonetheless, cautious FY 2024 revenue and EPS guidance may have led to perceptions of the stock being undervalued, suggesting that the market reaction could be an overcorrection in light of Endava's strategic focus on diversification and growth. Today's pick number four is BITI. To grasp why BITI might be seen as oversold, it's crucial to understand its inverse relationship with Bitcoin. BITI's value is designed to fall as Bitcoin's price climbs. With Bitcoin currently experiencing a bullish phase driven by heightened institutional investment, broader adoption, and favorable economic conditions for cryptocurrencies, its price has seen significant upticks. This bullish Bitcoin scenario contributes to reduced demand for an ETF like BITI, which benefits from Bitcoin's downturns. Bitcoin's recent surge is underscored by record high futures, open interest, and a market cap leap to 1.4 trillion, surpassing silver, signaling robust market participation and investor interest. This positive trend directly impacts BITI, potentially leading to its oversold status as market participants increasingly favor assets that gain from Bitcoin's rise over those betting against it. The bullish sentiment in the cryptocurrency market, especially for Bitcoin, is bolstered by factors such as MicroStrategy's Michael Saylor's belief in Bitcoin eclipsing gold in value and a more Bitcoin-friendly stance from Donald Trump. Additionally, the crypto funds have recorded a weekly inflow surge to $2.7 billion, reflecting the market's optimistic outlook and anticipation of continued Bitcoin gains rather than declines. Hence, BITI's perceived oversold condition can be attributed to the ongoing enthusiasm and positive sentiment in the cryptocurrency market, particularly towards Bitcoin. Today's pick number five is MSOX. The US cannabis sector has been facing a notable downturn, significantly impacting related investments, including the AdvisorShares MSOX 2X Daily ETF, which is designed to provide 2x the daily performance of the US cannabis sector. This downturn has been attributed to several key factors: legislative inaction, the optimism that followed the Democratic control of both the White House and Congress led to heightened expectations for federal cannabis legalization or at least significant reform. However, the lack of progress on federal marijuana legislation has been cited as a primary reason for the sector's struggles, with stock prices plummeting and capital raises crashing as legislative hopes faded, market oversupply, and price declines. In several states, cannabis markets are experiencing an oversupply, causing wholesale prices to plummet. This oversupply, along with robust illicit markets that compete with legal ones, has pressured legal operators, squeezing their margins and challenging their profitability. Economic conditions post pandemic. The cannabis industry saw a surge in sales during the early stages of the COVID-19 pandemic, driven by increased consumer demand. However, as the pandemic's immediate economic impacts have waned, so too has the inflated demand that benefited the sector, leading to a normalization of sales and an adjustment in stock valuations. Given these challenges, the US cannabis sector, and by extension MSOX, finds itself in an oversold position. Investors had high hopes for regulatory changes that have not come to fruition, and the sector is now adjusting to a more realistic set of expectations and market conditions. The path forward for MSOX and the broader US cannabis sector will likely hinge on several factors. Legislative progress at the federal level could reignite investor interest and confidence, while market adjustments to supply and demand dynamics could stabilize prices and profitability. Additionally, the continued gradual legalization of cannabis at the state level may offer new opportunities for growth and expansion despite the current federal standstill. For investors and observers of the MSOX ETF, understanding the broader context of the US cannabis sector's challenges is crucial. The sector's future potential remains significant given the continuing trend toward legalization and the vast consumer market. However, navigating the current landscape requires a careful assessment of both the risks and opportunities that lie ahead.